Hi, guys. Welcome back to Marantz. Rantz, plenty of good information, a little bit of motivation, a whole lot of truth, no financial advice. This is a one-take session, no edits, no cuts, about private equity, leverage buyouts into publicly traded companies, and why you should avoid certain investments. And I've told you guys, whenever I see the smoke, I tell you where the fire is. And if you choose to believe it, welcome. If you don't, well, then you're going to miss out on a lot of these opportunities not to lose your money. Can I put it that way? And or you could make money if you pop puts or whatever. I mean, bet on the downside of these investments, but it's inevitable. And I'll explain it to you guys the best way I can. For the last 5 years, there's been a retail apocalypse. Multiple retail companies in the commercial real estate footprint going bankrupt. And all they're doing is moving money from one section to the next. For fees, they over-leverage companies, and they collect those golden parachutes. Okay, and I'm talking about the executives themselves. All the executives know exactly what's happening here with these investments. I'll give you the point. Bed Bath & Beyond. You guys know about Bed Bath & Beyond. They were on a 5-year run of losing money, doing share buybacks, spending more money than they could ever imagine. They did it to themselves. They imploded, and all those executives got golden parachutes. But if you follow the money and you follow the trends, then you know that Bed Bath & Beyond sold off their assets. They sold them off to Burlington, and they sold off their image and likeliness to Overstock.com. So when Overstock.com bought out Bed Bath & Beyond, the name, that's all they bought, was the name. They changed their name to Beyond. Now, in October, I focused on the Container Group. I said the Container Group got an investment that made 0 cents. For preferred equity units, yes, but it made 0 cents to me because Bed Bath & Beyond, formerly of Overstock, Bed Bath & Beyond invested $40 million into Container Store Group. At the time, Container Store Group's market cap was $34 million. I said, why not just buy the company? Why would you invest? Well, I know why. Because they're going bankrupt. And I called it. I said, they're going bankrupt. I said this in October. Now we're here in December, and I want to show you guys just how outrageous these moves are. This is your chart for the Container Store Group. When they got announced that they were partnering up with Bed Bath & Beyond, they got a huge uptick here. It pushed up. You saw that candle there that day. Boom, it got pushed up. Now, after coming all the way down. After earnings, you found out they had no plan, and now they've sucked out every dollar of equity out of this stock. Why would somebody do this? Because there's money to be made in bankruptcy. I tell you guys every day. This company went from $10 a share all the way down to 51 cents. The investment of $40 million from Bed Bath & Beyond is now worth, well, the market cap of this company is $1.7 million, $1.76 million. I'm sure they're going to have book value of some kind within this company. I'm sure they're going to be able to sell off all their assets because the book on this company is $30-something a share. That's the book on this company. So there's plenty of assets to carve out. There's vultures in the ground. And as they circle like buzzards around this stock, you guys got to know what's going to happen. Other companies are going to come in and grab portions of this company, the Container Store Group. And it's set up this way. But when you come in and you do these deals, remember that private equity gets 2 and 20. They get 2% of the money up front, as in to handle the funds, and 20% of the profits. I don't think everyone understands how they actually make that money. It's not based off, how the stock performs and or how the company thrives and survives. No, these executives get bonuses. They get golden parachutes. They get everything. Then they leverage the business to fail, and they go do it again somewhere else. But this time they get to sell it off to their buddies. They get to sell it off to their friends in the same environment. So go look at vulture capitalism. This is a great case that we pointed out 2 months ago. Not to invest in. We told you to avoid them both, Overstock and the Container Store Group. And why? Because it is the private equity playbook that's playing out. And it just played itself out. And if you guys don't know, well, we can go back to here in the headlines, and this is what was announced. Boom. Container Store prepares to file for bankruptcy in the coming weeks. It's going to happen. It's going to happen, no doubt, and everyone knows it. The company's only worth $1 million now. I have literally drove past the one on Fairfax and 3rd in downtown LA. The thing's magnificent and beautiful. But it's at the Grove. Here's the problem. You're going to have to file for bankruptcy to get every dollar out of it. Creditors are lined up. Everyone has their hands out. It's a free-for-all, guys. It's private equity 101. If I were wrong, we would have been wrong by now. There's more. Pay attention. Connect the Dots Part 81. It's really quick and easy. Peace.